Hello, everyone, and welcome to the January Market Compass. Well, it's been about 1 month into 2026, and there's been no shortage of headlines, rising geopolitical tensions, and policy uncertainty in the U.S. around the Fed, tariffs, and government funding. Nonetheless, for the most part, financial markets have remained resilient. We're seeing positive returns for the S&P 500, and notably, there's been a bit of broadening in market leadership. Areas like small cap and mid cap stocks, value and cyclical sectors, along with EM and international markets have all outperformed. Now, what's driving this positive market backdrop? We believe markets are focused on the right fundamental drivers, namely positive corporate earnings growth, above trend economic growth, and a favorable interest rate and tax backdrop. Let's dive in. Since the start of the year, investors have been inundated by headline noise. Geopolitical tensions in areas like Venezuela and Greenland have flared, and at home, we're watching for the nomination of a new Fed chair, a Supreme Court decision on tariffs, and a resolution around government funding. However, for long-term investors, we believe it's important to tune out the noise and focus on what really matters for financial markets. We'll walk through 3 of these key factors here today: corporate earnings, economic growth, and a better operating backdrop. First, we believe U.S. corporate earnings are on pace to achieve double-digit growth this year. In fact, we have seen S&P 500 earnings growth revised higher to about 14.7% for 2026. Now, we know that stock markets are underpinned by earnings growth, and the good news is that this year, corporate earnings are coming from a broad set of sectors. Yes, the technology sector is expected to see double-digit earnings growth, but so are many other sectors, supporting that broadening of market leadership as well. Second, we see U.S. economic growth remaining above trend levels of 1.5% to 2%. Now, as of mid-January, the Atlanta Fed GDP Now forecast called for Q4 economic growth to reach an impressive 5.3% annualized, driven by solid consumption and rising net exports. Now, more broadly, we expect economic growth to continue to grow at or above trend levels in 2026, given the potential for lower interest rates and benefits from the U.S. tax bill. Now, we know when the economy is on solid footing and the consumer remains resilient, financial markets can perform well. Historically, it's when the economy is heading towards a downturn or recession that stock markets tend to fall more sharply. Now, this is not a scenario that we see on the horizon. Finally, we see the potential for a better operating backdrop for companies and households in 2026. Now, in our view, the Federal Reserve is likely to cut rates 1 or 2 times this year, bringing the Fed funds rate to around 3.25% to 3.5%. This would be supportive of better borrowing rates for consumers and corporations. In addition, the U.S. tax bill will kick in as well, and this likely means higher than average tax refunds for households this year. And for corporations, the tax bill offers benefits like an immediate deduction for CapEx spending. So this combination of lower rates and a better tax backdrop supports U.S. consumption broadly. Overall, we think it's important for investors, like markets, to focus on the fundamentals and tune out the background noise in the headlines. And what we see for the year ahead is a relatively favorable backdrop: broadening corporate earnings, steady above-trend economic growth, lower interest rates, and a supportive tax environment. Now, we also know that there could be bumps along the way. Markets don't rise in a straight line indefinitely, but investors can also use market volatility as an opportunity. Consider diversifying across sectors and asset classes, rebalancing investments, and making sure you're aligned with your personal allocation goals. You can always speak to your financial advisor to help you come up with a plan that's best suited for your risk and return preferences. And remember, a long-term diversified approach in any year, but especially one filled with headline noise, can help you stay on track for meeting your financial goals. With that, I thank you, and we'll see you right back here next month for the Market Compass.